This is Dr. Anita Jalagam, Assistant Professor of Commerce, GDC Arts and Commerce, Adilabad. Now I am going to teach about accounting, the basics of accounting. Before that, meaning of accounting. Luca Pacioli is considered to be the father of modern bookkeeping. The only recording of financial transactions in bookkeeping is not enough to achieve the commercial objective, but also it is important to know the financial result. Generally, all of us know that Luca Pacioli is the father of modern bookkeeping. From ancient times, all were following about accounting, but what we are following today, the modern bookkeeping, has been used the very first by Luca Pacioli. That's why he is called as the father of bookkeeping. The only recording of financial transactions in bookkeeping is not enough to achieve the commercial objective. The only recording of financial transactions is not enough. What is to be done? But also it is important to know the financial result. We record the transactions to know the financial result at the end of a financial year. The purpose is to find out the results or profit or loss or financial position of a firm. Not only recording of transactions, it has to be analyzed to get the results. Next. Okay. It is necessary that the recorded transaction is collected, classified, and summarized to know or to find out the best results. We have to collect all the transactions which have been recorded and classified according to the need of the firm, and they have to be summarized. This work is done by accounting. In accounting only, all this analysis has been done. But in bookkeeping, only the transactions have been recorded. After recording the transactions, all the recorded transactions have been collected and classified and summarized in accounting to take a better decision. After identifying the financial transaction through the basic accounting process, these are recorded properly in a systematic manner in the books. After identifying the financial transaction through the basic accounting process, there is a particular accounting process is there. According to that process, we have to arrange or record in a systematic manner. The meaning of accounting can be made clearer by understanding its process and components. We understand in a better way after we know the process and components of accounting. Before that, we see what is the definition of accounting. The process of recording, summarizing, reporting, and analyzing required financial information relating to the economic events of an organization to the interested users for making decisions. In a business concern, in every step, there is a need to take decision. In planning, we have to make a decision. We have to choose a better plan. That is also called a decision. In every step, there is a need of decision to take. Then the process of recording, summarizing, reporting, and analyzing required financial information related to the economic events of an organization to the interested users for decision making. For Interested users for decisions, making decisions means in making decisions, all these analysis and summary which have been made in accounting is to be used. It is useful for decision making. We see what are the components of basic accounting. First one is recording, next one is summarizing, reporting and analyzing. The very first, we record the financial transactions. First we record the transactions whenever they occurred. Then we summarize those recorded transactions. Then we prepare reports after summarizing. Then we analyze those transactions. We analyze the results. Next, what we know, what is accounting and components of accounting. Then from that information, an objective question can be asked like this. The first step in accounting process is what we do in accounting process first. Is it summarizing, interpreting, recording or none of these? Obviously, if you know what is accounting, then you can answer that it is the recording is the first step in accounting process. Now we know about the bookkeeping and accounting. What is bookkeeping? Recording of all the transactions of a business concern. Just a recording or note down of all the transactions as it is when they occurred or everyday transactions is called bookkeeping. Then what is accounting? Analyzing and reporting of those recorded transactions of a business concern. Here in bookkeeping, only recording of transactions, only making notes of those transactions. But in accounting, those recorded transactions have to be analyzed and reported. Okay. Then we understand completely after knowing the difference between bookkeeping and accounting. When we know the difference, when we compare the two things, then we can understand better. In bookkeeping, recording of financial transactions. Recording of financial transactions where in journal, ledger and trial balance. The journal, we know that it's a primary book or rough book. Whenever the transactions are recorded primarily or in the form of journal entries. Then ledger. What is ledger? Ledger is a secondary book. It is prepared after journal. After entering all the journal entries in journal, we have to take them into ledgers, into their related ledgers. Then trial balance. What is trial balance? Before preparing the final accounts, the balance has to be trialed. Means whether all the transactions have been recorded properly, have been followed accounting principles or not. We have to check that. How all the transactions which have been recorded in journal have been taken into ledger, and from them all the debits have to be taken into trial balance to the debit side, and all the credits have to be credited in trial balance at credit side. Okay. Next, what is accounting? Bookkeeping, recording financial transactions in journal, ledger and trial balance. What happens in accounting? Analysis and interpretation of financial transactions which have been recorded in journal have been analyzed, journal ledger and trial balance, or which have been recorded in bookkeeping have been analyzed and interpreted in account in or by preparing IS. IS means income statement, or BS balance sheet, or CF cash flow statements. By preparing these statements, transactions have been interpreted, and or by preparing these statements we get some result. Okay. In bookkeeping, cannot ascertain results or financial position of business. In bookkeeping, nothing can be ascertained or nothing can be found out. But in accounting, financial statements ascertain results or financial position of business. By preparing those statements, we get some result. And by preparing balance sheet, we know the financial position of a business. In bookkeeping, no subdivision of bookkeeping. There is no subdivision, just recording all the transactions in journal ledger and trial balance. But there is no subdivision in bookkeeping. But in accounting, financial cost and management accounting, there is no only one accounting. According to the use, it may be financial accounting, or it may be cost accounting, or it may be management accounting. In financial accounting, gross profit, net profit, and financial position of a firm have been found out. But in cost accounting to know the expenditure or cost of a particular process or for a particular product. In management account has been ascertained. In management accounting, the decision making, how to be managed a concern, a business institution, or how to take decisions, decision making results have been found out in accounting. Means in accounting, there is a financial accounting to know all the results or final results of a business concern, or cost accounting to know a particular branch or a particular product, and management accounting to take decisions of management. Accounting has been used, that is called management accounting. Like this, subdivision of accounting is there, but in bookkeeping there is no subdivision. Next, bookkeeping ends. Where bookkeeping ends, accounting begins there. After recording all the transactions only, they can be classified or analyzed or interpreted. After bookkeeping, accounting starts. We can understand in a better way when we know the examples. Bookkeeping means sales invoices, purchase invoices, payroll, general ledger. All these are the examples for bookkeeping. In bookkeeping, not only recording all the transactions, we have to recorded, or we have to be kept in ledger. Okay. In accounting, or examples for accounting: reports, interpreting accounts, and taxation, forecasting. All these are the result giving statements are reports. In bookkeeping, sales invoices, what all these are evidences for the transactions. But examples of accounting is about the analysis or result giving for decision making. We can understand betterly after knowing the examples and the difference between bookkeeping and accounting. Thank you.